Wednesday, November 5th. If you're a Republican, it is probably a nightmare. I don't know. Honestly, I don't care. I will tell you, the reality of it is, here in Georgia, you got the 2 Democrats elected to the PSC, the Public Service Commission. Yay. It just balances it out. Again, 5 Republicans, our rates are 20, 30% higher than what it was. It's a good morning for me. The rest of the stuff doesn't really affect me. I could care less. Happy that the Democrats are winning something because I think the 2-party system works. When the 2-party system doesn't work, then that's a bad thing. When the 2-party system works, it's a better thing for America. So whatever your thought process this morning about whoever you were for, whoever you were against, I congratulate you. Because if you are a Republican, I congratulate you because you've got the House, you've got the Senate, you've got the executive branch, and most likely you're living in a state that you enjoy. If you are a Democrat, I congratulate you because you got very positive message last night that maybe the Republicans aren't as powerful and popular as they thought. So whichever side you're on, we care about stocks. We don't necessarily care about politics unless it affects us. And affecting me personally was the Public Service Commission. So I'm happy that those 2 Democrats won. I got a lot to go over today. We will go over strategies, and I will give you some screeners. I will tell you a specific strategy around TrendSpider that I've been doing. Alpha picks, we got a sell yesterday, and I'll kind of go over my thought process on that. I won't mention the stock because, again, I'm very sensitive to the fact that people subscribe to this Alpha picks portfolio, and Alpha picks wants me to hide that. So I'll go over my decision process, which should help some folks. We will talk about arbitrage because for a $20,000 bet last night, you could have made $7,000, and it was 100% guaranteed win. It's called arbitrage. We will talk about the markets because crypto continues to slide. An interesting FinViz thing last night. I will go over a survey in my high net worth group. These are people who are worth more than, I think, $3 or $5 million. I don't know what you have to be to get in there. I'll tell you a good story. Opportunities in cruise lines. I will teach you how to look at things because yesterday I was sitting there and on TV, on CNBC, they're going, oh, cruise lines are an opportunity in Norwegian. It just wasn't that bad. Is it an opportunity? Crypto miners, they powered everything. We will talk about an opportunity with Tesla. Valuations, do they matter? And then we'll go over earnings. And finally, I will go over crypto. So it is a jam-packed show. Yesterday, not a great day. Feels horrible. Feels what it is. But I will tell you, one that didn't get killed was Apple. And if you look at the daily candle on Apple, it was up 0.67%. Why? Well, they basically put it out there that maybe, just maybe, they're going to go with Apple Intelligence using Google. And Dan Ives says if they get it right, it's a $400 stock. Where are you trading right now? $270. This is 50% of my portfolio. I didn't feel the pain yesterday because Apple was up. Apple was up, and it's up 0.2% in pre-market. Nothing great. It's trading at $270. This was a $260 stock. I was afraid it was going to pull back. It hasn't. So it seems to be holding up there. So where could we go? Well, take a weekly chart right here. And I've got those points right there at 260, 240, and 200. And those are areas that I've identified as support and resistance. And it's very simple. I just take previous highs and I put it out there. But let's do a trend line. Let's go back to 2020. Let's go back to COVID. And I'll just go on TrendSpider here and we'll put it in trend line. You just got to touch at least 3. You're right on the trend. You are literally right on the trend. Down here at 200, buying opportunity. You are just above the trend line. And so when he says it's a $400 stock, he's not talking about next week. He's talking about sometime next year. So I like this article. I like what Dan Ives says. I like what Goldman Sachs says. Everybody's coming back into Apple. Apple is just one of those names that even during a downturn, you're going to see big earnings, not from a percentage growth standpoint, which is, again, Apple is expensive. So if you buy this one, understand what you're buying. It's got an F on valuation. Why? It's trading 32 times forward earnings. The sector trades at 24. But they get the benefit. Why? Because they have huge profitability at 46% gross profit margins. They have great momentum. Look at that. Not one down here. And the revisions are okay. Mostly positive. So again, we're going into a market that is a little wonky. So maybe you want something like the Peter Lynch Screener. Look at these changes yesterday. I'll tell you. They're all right there. 3 of them were up 2%. This is a Peter Lynch Screener. By the way, this is insurance companies. And we'll go down, a little bit later and I'll do a FinViz scan for you. It's kind of interesting. You see exactly what was up yesterday. Looks like a little rotation. And for TrendSpider folks, I'm going to give you some strategies. For TrendSpider subs, I updated the Grok top Twitter symbols list last night. So when you can just click on this link right here in the chat and you can import it. And then you have the daily stock pick Grok daily Twitter mentions. I literally just go in to Grok and I say, update this list for me. And it gives me all the top names that are mentioned in the last 24 hours. You've got AMD, you've got Amazon, you've got ASST, you've got CIFR Mining, you've got GameStop, you've got IREN, Meta, Microsoft, NVIDIA, and Tesla. So there's a strategy for you. And technical strategies during these times work, okay? You want to look at charts. Look at the setup I published yesterday about AMD, and I published it in the newsletter. So if you have any questions about it, go and read the newsletter, because yesterday on this podcast, I went over AMD and I said, hey, go and figure out what's going on in this chart on AMD, because the setup is clear. And I published it yesterday here, and we can look at it live, okay? We can look at exactly what happened. What I said was, hey, on the weekly, take a look. And I drew a line right down here based on the RSI at 81. Well, you hit it one time. What happened? Well, we saw a 66% turn down. And you can say, well, that was 2022. They were raising rates. Okay, maybe an anomaly. But then you hit it in February 2024, okay? And it's followed by a 40% pullback. Well, now you're back at 81. You're at 82 on the RSI. And your MACD is very similar to where it was the past 2 times. Are we going to see a 40% pullback? And it was earnings. So what's the best predictor of the future? It's the past. And so you can use these indicators to try and find times when they were like this in the past. Is it going to work 100% of the time? No. But in this market, you want technical strategies like my 4-hour algorithm. The 4-hour algorithm makes you 122% in AMD. And you can see we're up 68% since the last time. Well, not 68, because let's pull it back here. Because it very well might likely give you a sell on today's morning candle. I have an alert. So at 9:30 when the market opens, I will get a text and it will say, hey, sell your AMD. But this is a back-tested strategy. Again, what's the best predictor of the future? It's the past. It gives you real-world results on any stock or ETF. My 4-hour algorithm, it was built after COVID. Remember, I retired in 2020, January 2020. I lost 40 to 50% of my portfolio in the next month. I didn't want that to happen. So what did I do? I went out and found a strategy and I built it. Okay, it's not 100%, but it allows me during major downturns like 2022, it guides me. Where are the stocks or ETFs in my portfolio? Are they a buy or are they a sell? I've used this strategy exclusively as my technical trading strategy, and I use it with the MACD, the RSI, Bollinger Bands, and assorted moving average to quickly and easily assess whether I should trim, sell, buy, or hold a stock or ETF. That's it. It's in my watch list. It's in my portfolio. You can get all of this, and you can learn technical strategies again through TrendSpider. Remember, you can get it today if you'd like. But the reality is there's a Black Friday sale coming up. Put it on your holiday list. That's it. My 4-hour algorithm only comes with annual plans. During the holiday sale, during the Black Friday sale, they will most likely have trials. So try it out. And when you sign up for an annual plan, you'll get my 4-hour algorithm, okay? Now, part of the other thing that is Black Friday is Seeking Alpha and Alpha Picks. We had a sell in Alpha Picks yesterday. In Alpha Picks, if you didn't know, it is a data-driven portfolio. You get a pick on the 1st, a pick on the 15th, okay? But they tell you when to sell. And there was a sell yesterday on a stock that I have brought up on this in the past week, okay? It was down big on earnings. It's a strong sell in the quant now. And what does that mean in a rules-based portfolio like Alpha Picks? It means sell it now. So I won't name the name, but let me go over the 4 criteria that I used yesterday to determine if I'm going to hang on to this stock or if I'm going to sell it. In a market that's up over 6 months, okay, we are up tremendously in 6 months. This stock is down 56%. If you look at the quant factors, now versus 6 months ago, okay, anybody with this bundle can do this, but the valuation is better because of the drop. But the momentum is what really takes this one down. Remember, when you look at a stock in Seeking Alpha, and we'll just look at AMD because they reported. When you look at this, these factor grades, okay, you want to look at the now and the 6 months ago. But this particular stock that's a sell in the Alpha Picks, it's based on momentum, which is, I tell you, is probably the most important. And I looked at this particular stock in TrendSpider. It trades okay in the 4-hour algorithm, but nothing special. When I looked at how much of this actual stock I owned, it was minimal. It was a pick on June 2nd of this year, so it never really was allowed to grow in the portfolio. I had less than $1,000 purchased of it because I had trimmed it since it hit a resistance level back in September at $162. And by the way, it dropped. It is today trading at $50. So again, TrendSpider alerted me to trim. With the stock trading at, it's at $70 today. I just don't want to manage a position that is less than $1,000 in a portfolio that told me to sell, because I'd have to go back there and look at it. So I moved on. I took the $500 loss that I had in there because it was down like 50%, and I moved on. I'll put the $500 somewhere else into a winner. And that's the strategy that I took on Alpha Picks yesterday. So if you want Alpha Picks, again, this is why I tell you to get Premium and Alpha Picks, because you can do that type of analysis with the bundle. And I like it. I like it a lot. But let's talk about arbitrage. Because if you didn't know about this, early on in the crypto days, this is what Sam Bankman-Fried actually did. They used to buy Bitcoin in Asia, okay, and then sell it in the US. Because why? Because in Asia, Bitcoin actually traded for a discount of up to 30% lower than it did in the US exchanges. Okay? This is arbitrage. And last night, you could have picked on Kalshi $100,000 of Mamdani to win, and then Polymarket of $10,000. I'm sorry, it's $10,000 each time. Polymarket, again, Mamdani, no, $10,000 each. You would have won $7,000. And one is yes, one is no. That's arbitrage. And so in these betting markets that are not regulated right now, when you have different platforms, that's arbitrage. So a $20,000 bet last night could have won $7,000 by the time this election was over in one night. That is huge. If you can find something like that in the markets, that's what you want. And what are we seeing today? Well, the biggest movers, crypto stocks are just crashing. Crypto continues to slide. Earnings are driving the market. But as most stocks are priced for perfection, any miss on earnings or guidance drives them down. So let's just take a quick look. Digital turbine. I don't even know what they do. Shares jump as the company beat expectations on both profit and revenue and raised, yes, beat and raised. Rivian. Shares rose after reporting a smaller than expected loss, beat, with revenue of $1.56 billion, nearly doubling growth and topping estimates. And one of the key was the jump in software and services, a 47% rise in automotive revenue. It was the margins. So is Rivian turning around? Let's look at Rivian. You know, we got the earnings coming up. I'll look at it. The 4-hour algorithm had you out. But it doesn't work. It loses you 26%. So it's not a strategy that I would look at. Hamid is big into Rivian. Hamid is from Savvy Trader. But it's a hold in the quant. What does Wall Street think that it's worth? They think it's worth $14. That's a 14% upside. You're trading at 13 right now. But again, the factor grades are not great, but they're getting better. And that's what Hamid is investing in, the fact that it's getting better. But when you go down here, those are the only two that are positive. Pinterest down 20%, Arista Networks earnings 13%, Supermicro earnings down 9%, AMD down 5%, earnings, Hive earnings 2% down. Remember, you want to watch the VIX. The VIX is a big thing. So let's go back and look at the VIX. The VIX over 20, that's danger area. That means, hey, we've got a problem in the market and volatility is going to pick up. This was trading, if you just go back 5 days ago, this is up 13%. 5 days ago, this was down near 16. That's not a bad rating. That just means, hey, things should go up. But you want to look at the VIX. The other thing you want to look at, and we talked about this, CNN Fear and Greed Index. And that right now is at extreme fear. It was at fear. It's gone down, but the market went up. Was this telling us, hey, be careful? And the 10-year bond rate, you want to go over to market data and you want to look at bonds and you want to say, okay, let's look at this. The 10-year bond, 4.12, it's going up. It's going up. So there are big indicators. Add on to it that Berkshire announced this past weekend, they increased their tax position. Remember, last year at this time, Buffett announced he got out of VOO and SPY. And you can also go and look at FinViz. This is a free site. You should have this bookmarked. And what I did was just pick the S&P. And I said, went over to technical and I said, give me all the stocks in the S&P that are 40% or more below their 52-week high. There are 25 of them. Okay? And when you sort over yesterday's changes, what are the top? Centene Healthcare, Molina Healthcare. There's Chipotle, which only gained 0.73. And then there's FactSet, but it's healthcare. There are a large number of healthcare in here. Look at the healthcare down there. So what does that tell me? It's interesting. The ones green from yesterday, it's a defensive sector. Are people flighting towards safety? Does that get the gold bump back up? And my high net worth group, okay, it's Long Angle. You can go and look up longangle.com. If you have more, I think it's like $3-4 million that you want to go into this with, you can ask me for. It's a great group of people that just, you can ask questions that you don't want to ask your family and friends on freaking Facebook. And that's what there's no annual fee. There's no nothing. They have investment opportunities. It's a great way to meet other people who are high net worth. It's a networking group. It's great. There was a question last night, to bubble or not to bubble. A lot of recent news discussing bubbles. So I figured I'd throw out a poll. This is something I'm curious about. Do not plan on changing any of my allocations. Again, most of the people are not making any moves on anything. And it says, and I'll put this in the newsletter, are we in a bubble? 24% yes, said yes. 33% yes, but we're trending higher. 12%, and by the way, that's 33% is the number one. 12% say no, valuations might be a little high, but nothing abnormal. 3% said no, we are appropriately valued and undervalued due to the disruption. That was me. I think we're undervalued due to the disruption. And 28% said, hey, we're not sure. We're not sure. But the number one is 33 saying, yes, we're trending that way towards a bubble, but we have a long way to climb. And these are high net worth people like me. The bulls are out there. So now I was watching TV yesterday and Norwegian Cruise Line, it crashed. We can just go look at it. NCLH. They had earnings yesterday. It was down 15%. 15% on earnings. And by the way, the earnings weren't bad. They just weren't bad. Weak Q3 results forecast amid worrying cruise line industry. It wasn't that bad. The headlines would lead you to think that it was bad. It wasn't that bad. Now, I said, hey, let's go look at the cruise lines. I will preface this. Carnival Cruise Lines and Royal Caribbean are alpha picks. They are both outperforms in the sector. They're alpha picks, but the whole lot of them were down yesterday in a major way. So let's look at these, okay? This is Seeking Alpha, and you can take a look at it. Look at the returns. If you just look at one day, 5 days. Let's just look at 5 days. 5 days there. Look, that's not a great thing. You look at 1 month, not great. You look at 6 months, they're okay, but they're trending down. You look at year to date, they're okay, but they're trending down. Norwegian's down 25% year to date. Viking Cruise is up 29%. Now, of this, Carnival Cruise Line is the only quant that's rated a strong buy. Well, let's go and look why. Well, it's got a C+ on valuation. It's got an A- on growth, A on profitability. Again, it looks like it's the best, but you go up and you look at the returns year to date. It's not the number one return. Viking Cruise Line is the number one return. And that's expensive with a good growth, with profitability, with momentum and EPS earnings revisions. Now you see where it's trading. Last close 57, 52-week high. They're all close to it. They're not super far away. Here's the total returns. Look at this. 1 month, they're all down. 3 months, they're all down. 6 months, you've got Carnival and Viking up 33 and 34%. The other two are lagging. 9 months, Carnival is actually down 3%. Viking is up 10%. Then let's go and look at the valuation because Viking is expensive. Full year. 23 times forward earnings, okay? 12%, 12. They are the most expensive. Norwegian's the cheapest. You look at the growth, Viking's growing the most, year over year, 17%. Nobody is even close. Royal Caribbean's half of it. Profitability, Carnival Cruise Line wins out there. Ownership, shares outstanding, you can look at that, float, insider sales. Performance, there's the percentage performance. Earnings per share revisions up. Carnival is 23. 17 on revenue. Viking doesn't have anybody really looking at it. Income statement. You can see 26 billion, the size of these things. Viking's the smallest by far. Balance sheet. What do they have on hand? 1.76 billion for Carnival. Again, Viking's the smallest, but they have the largest amount of cash on hand. So it's interesting. Viking is the only stock that I would look at in this sector. For me, it's a sector that's not worth the risk right now. I don't know the industry well. The consumer may be weakening based on the Norwegian returns yesterday, earnings yesterday, and their guidance. It's just not worth the risk. So when I hear something like, oh, Norwegian's a great buy, I would go over here and I would say, okay, if it's such a great buy, Norwegian, NCLH, if it's such a great buy, maybe I want to trade it. And maybe that's not a bad idea. 4-hour algorithm makes you 36% versus buy and hold at 39%. So it makes an okay percentage. And you're under the 200-day. And the times when it's gone under its 200-day, it's traded back above the 200-day. But if you get a death cross, remember, if you just buy here at 21, this dropped all the way to 14. So is it worth the risk and reward? I would say no. For me, it is absolutely not worth the risk and reward. So I would move on. Now, the opportunities in crypto miners, that's something I am taking seriously. And yesterday, if you look at a 5-minute chart yesterday, okay, we're just going to look at the morning. You were trending down and CIFR had reported earnings and popped up the day before, but you were trending back down. You could have bought this for $20 yesterday, $20. It went right back to $25. Did you buy the dip? Again, it was just confirmation on this 5-minute chart. You could have bought the dip. IREN did the same exact thing on a 5-minute chart. If we look at this one, same thing, dipped down and then it popped back up. You're trending kind of sideways, but it popped to $72 yesterday. NBIS, this one has a different chart, and this one is concerning me. 4-hour algorithm sent me an alert last night to get rid of this one, to sell it. Am I selling it? Well, this is what's interesting. When I looked at this chart last night, I said, you know what? That 200-day on this 5-minute chart is just trending down. But all of a sudden, today, the 5-minute with the 50-day and the 200, they look like they're turning positive. Maybe this one pumps. Maybe this one pumps, because the last time we saw something like this, we'd have to go back. Yeah, the last time we saw something like this was way back here. Now, it took 1, 2, 3, 4 days to actually turn. So is this something that I'm interested in selling? No. My position is not large. It's down 10% in my portfolio, but that's under $1,000. I'll be adding to this one as it tells me to do so, because in the 4-hour algorithm, this wins 56% of the time. I am perfectly fine dealing with a 4-hour algorithm that tells me to buy, and it wins 56% of, and that's only the last 12 months. So it's not back tested like tremendously, but I like this opportunity. So it's not a trade for me. This is building up my investment. Hot did the same thing on the 5-minute chart. Again, crypto miners, have them in a watch list. And you might have a golden cross on the 5-minute today. And even EOSC, the EOSC. EOSC reports today, but their stock on a 5-minute chart, it just continues to decline. Now today, it's getting a bit up. They report after the bell. Now I'll give you an idea that I have, okay? If you haven't been paying attention, Tesla's, their shareholder meeting is tomorrow, and they vote on Elon Musk's pay package, okay? Tomorrow is the day that Elon finds out if he gets this pay package or not. Norwegian Sovereign Fund, which owns a lot of Tesla stock, they said they'll be voting no. Elon and other Tesla bulls have been pressuring Schwab, pressuring other financial institutions to vote yes. I'm a fan of Ron Barron, and Barron Capital owns a lot of Tesla stock. He has been a bull, and he said, hey, we will own Tesla stock as long as Elon Musk is the CEO. Personally, I'm not a fan of executive pay. I hate that Elon will get all that money. But here's the thing. It's tied to the price of the stock. So the stock, he only gets the money when the stock goes up. I don't mind paying him that. He is that important to this company. So if you think that Elon is not going to get his shareholder package, use one of these, one of the leveraged ETFs. Let's go and see in my leveraged ETFs list. I've got a leveraged ETF. Let's just go down to T because I think there's a couple of them. We can look at TSDD, was a 2 times daily leverage short. You can look at TSL, which is a 1.25 time. That's a long. So that's expecting him to get the package and go up. TSLG is a long, twice time. And TSLL, that is a short. Or I'm sorry, that's a bull. And TSLQ is a 2 times leverage short. And TSLR is 2 times long. There are a bunch of them. TSLS is 1 times short. TSLT is Tesla daily long. So there's a bunch of them that you can trade. But again, you bet which way you think it goes. And it's a good one because again, if he gets it, I expect the stock to pop. If he doesn't get it, expect that to just crash. Now, valuations, and Ron Barron, by the way, if you want to read this, I'll post it in the newsletter. It's a great just a tweet about why he should get it. Tech valuations, they matter. They matter. They're pretty reasonable given the growth rates. Again, valuations matter. I've gone over it before. Steve Kress turned me on to the PEG ratio. And that's what this article points out. So it's been one of my favorite. Here's an analyst from CNBC yesterday who explained PEG is the way to look at some of these companies. The way that we're looking at valuations today is relative to growth. As he explained that the PEG ratio, PE divided by the growth rate, allows investors to normalize valuations against growth potential, helping identify more sustainable investment opportunities. Now, Palantir was one of the things that he was talking about. When you go and you look at the PEG ratio, it's still expensive, but it's not as crazy as 261 times forward earnings. 3.81 is nuts, but their growth is phenomenal. And this one's trading at 189. For me, if this one gets below 160, I am buying. If it looks even close to 160, I'm buying. Why? Because the street has told you it's a $200 stock. Now, it doesn't mean that it's going to go right back to 200. But again, valuations matter. And I put out, this is a forward PEG ratio. NVIDIA. When I found out that NVIDIA had a PEG ratio of this low, I built this screener, and you can do it too. I'll share the screener so you can just look at it. But I like companies that are growing. I wrote this when the PEG ratio on NVIDIA was 1.18. It's gone up since then. If we just go to NVIDIA, I think it's 1.2 or something. Let's see. It's a $4 trillion company. That's the yeah, it's 1.22 going forward. But these are stocks that have a low PEG rate. You can see 0.2 on Micron. Their growth is phenomenal. That stock has taken off. You can see year-to-date performance, 159%. Bank of America, they got a 0.94. They're up 21% year-to-date. Disney has a 1, and it's up 0.11. 6-month performance up 20%. Dell, they're up 34% year to date, a 6-month gain of 63%. Merck, I hate. I will tell you, it's got a low PEG ratio. I just hate pharmaceuticals. Uber, 56% year to date. It's got a 0.50 with their growth. So again, this is a way to look at stocks that are good. And by the way, we're going to go over earnings now. So AMD slips. They're down 2% in pre-market. They were down 3% yesterday. My theory was right on this one. It beat. It didn't take off. And here's another good thing that I noticed yesterday. You know, sometimes you want to look at monthly candles, okay, on some of these stocks. Is this too big of a stock? And if we just look at a monthly candle of this and we explode this one up, okay? One of the questions is, do you think that a monthly candle, you know, you typically don't see a monthly candle push up. It needs to be green to push up where it closes at the high. Well, it can be red if it closes at the high, but you want that confirmation. Now, this one is way outside the Bollinger Band. At 267, that's the high. You're trading at 240. Do you think that this one on the monthly can break 267 with the valuation that it has? I think that's going to be difficult, especially with the MACD up there, especially with all the buyers. Sellers have to show up. So do I think over the next month, this one's going to break that 267? I would say no. But again, stranger things have happened. And part of the reason it went down yesterday, by the way, Amazon filed a 13F and they got out of their AMD investment completely. But it wasn't a choice of selling out. It was based on an investment that they had. I don't know the whole story, but it was based on something that they had to sell it. It wasn't that they wanted to sell it. So then you look at the next one, SMCI. They got crushed. They got crushed way down. After $800 million Q1 revenue miss and Q2 revenue outlet crushes estimates by $2 billion. They're saying, hey, we're going to do good things. And it's getting crushed. Crushed. Why? Because their growth is a C+. We need to see the actual growth. And their revisions, they're all coming down. Arista Networks killed it. 27% revenue growth. Again, it's priced for perfection. Now, it's not bad rankings compared to 6 months ago. And when you look at Wall Street, they have a $162 price target on it. It was trading at $153. When you look at this, they've chased it up. They will start to bring it back down. Again, valuations are a bit stretched. And when you look at Rivian, we went over Rivian. It edges towards profitability. If this turns profitable, this stock will start to get more towards 20. It's trading at 13 right now. Now, TEM, it's down. This is Nancy Pelosi's one. It's down 1.5%. Their earnings were okay. It wasn't anything great. One that got killed is Axon. Axon Enterprise stock plunges on quarterly earnings miss. This is one of Shai's favorite. It's at 547. Is this a buy the dip? It's still expensive. It's still expensive. It's better than it was 6 months ago, but it's still expensive. 6 months ago, this is up 13% in 6 months. 13%. It's down 22%. So expect that 13% to be wiped out. Now their valuation, they're trading at 104 times forward earnings. Their PEG ratio is 3.65. So everything looks great, but it's still expensive. Wall Street chased this one up. They think it's worth $859. But again, they chased it up. Expect it to come down. So things like this, for me, it's trades. It's trades. 4-hour algorithm got you out with a 1.33% gain. But you could have gotten out way up at 700. But when you look at this stock and you look at it on a weekly basis, it still has probably more room to go down just under that 50-day. If it gets under that 50-day, it's a grower. So expect the buying to start. So let's look at some stocks that are coming up today. You've got one of my favorites, Hood. Hood's average price target on Wall Street is $147. That's an 8% upside. It's up 2% in pre-market. We've seen all the crypto stuff that has been going on. I like it. Again, I will add this one as the 4-hour algorithm tells me to add it. I still don't have a full position in this. I've got plenty of it in it. I've got a large amount. I bought on that 139. I was perfectly happy when it was up there at 147. Am I happy now that it's a 136? No. But I'll wait for earnings. Qualcomm, remember, they're looking to take on NVIDIA and AMD, and they are in the core portfolio. I like this stock. This stock has been on a heater. Algorithm got you in there at 164. You're trading at 173. One that I think could take off today is AAPL. Remember the short report that took it down? If AAPL comes in with earnings, expect this to pump back to 700. I like AAPL. Now, is it a great buy? It was a better buy at 500 where I started loading in there. But again, at 600, 613, and with their earnings, you can see what to expect. It's a hold. The valuation's gotten worse as the price has gotten up. Year to date, this one's up 87%. It is priced for perfection. Wall Street thinks it's a $649 stock. If they come out with crazy earnings, expect that to go up. Then you've got Duolingo. This stock just has tons of cash, but it hasn't done crap this year. Year to date, it's down 20%. Elf, have they picked up their sales? Remember, this one just got killed with the TikTok ban. That's where they sell most of their stuff. Joby is reporting. Will they give any guidance on revenue at all? One of the ones, we brought it up before, EOSC. This is one of Shai's favorite. September, Shai and Daniel Newman love this one as an AI infrastructure price. I brought this one up in September. I put that note in there myself. Again, the revisions, 5 down on revenue and earnings per share. Is this one due for a pullback? Maybe. Again, 1 month it's down 5%. So find a strategy that works for some of this stuff. And again, you have to do it for yourself because everybody's risk tolerance is different. Now I want to bring up Bitcoin. Bitcoin dipped under 100,000 yesterday, if you didn't know. If Tom Lee is right, and yesterday's video was right, you're due for a huge pop. But it hurts as it's down because, yeah, I'm down on Bitcoin. I think my average purchase price is over $100,000, but I buy iBit and stuff like that, so I don't necessarily pay attention to the price. But as it comes down, things that are leveraged, like MicroStrategy, which has an average price of $74,000. Imagine if it gets under that. Can Michael Saylor borrow more money to keep him in business? Because Bitcoin has entered a bear market. I didn't know there was a fear and greed index, by the way. And fear and greed index signaling, I guess, alternative fear and greed index. It's at 23. I didn't know there was a fear and greed index for a crypto, but it's at extreme fear. Last week, it was neutral. Last month, it was at greed. That changed quick. But again, is it a bear market for crypto, or is this just part of the normal pullback? And Bravos is making the case that, hey, Ethereum here, look at the number of short positions over the last 2 years. The top are bullish positions. The bottom are bearish positions with Ethereum. They're making the bet that you come up. Again, this is Bravos Research. I posted their stuff about Bitcoin yesterday. They're posting about Ethereum. They have a great track record in trading this stuff. So take a look at this one. If you are in crypto and you are worried, take a look at the one. Because my strategy on crypto is buy and hold. That's it. I learned my lesson. I lost a bunch of money by trading crypto. I'm just going to buy and hold. That's it. Now, again, if you want to see what's available for earnings tonight, you got Hood, Qualcomm, IONQ, ARM, AppLovin, Duolingo, Fortinet, Elf, Joby, EOSE, Dash. You've got Lyft, which we saw from Uber. You got Snapchat, which is always good for a bump. You know, they're expected to lose 12 cents per share, revenue of $1.49 billion. Imagine if this is a $10 stock and it's trading at $7. It regularly pumps to 10. So know what you have in your portfolio, know how you trade, find a strategy, do it right. And again, the tools that I have, there are 2 tools. Everything can be found here on Linktree. I got to change that messaging. But again, there are Black Friday sales. Put these on your watch list. And before you order, the most important thing, before you order any of these tools, go to Linktree and click on that link. They are affiliate links, so they will get you into my affiliate program. And that's key, because if you're not in my affiliate program, you don't get to import any of the stuff that I have. So click on that link on Linktree. If you have any questions, my email address is up here. Take care. I will talk to you tomorrow. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily. to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.